Our flagship publication, Futures of Alts, is one that we released the last few weeks, where we predicted that total AUM for alternatives, standing at 16.8 trillion today, will reach almost 30 trillion by the end of 2029. And private equity is seen as the fastest growing asset class in terms of AUM, growing from 5.8 trillion to 12 trillion at this time. And a big part of this growth that's anticipated to come from private wealth. So much so we're hearing talk of a convergence of public and private markets. And in a recent earnings call for BlackRock, Larry Fink went so far as to say that private markets won't be alternatives anymore. So this question is for Lisa and Lee. Can you describe the part of the industry you sit in and talk to the extent you agree with the bullishness of our estimates at Preqin, and how you expect increasingly active private wealth investors to impact the part of private markets businesses you operate in?
Okay, thanks for that, and thank you for having me on this panel. As it relates to the comment by Larry in the BlackRock earnings call, I think when we think about where I sit, the co-head of our secondaries and liquidity solutions team. Essentially, what is a secondary is where we offer liquidity to illiquid assets, like private equity, like venture capital, like private credit. Essentially, any asset class where investors, typically institutional investors, historically have invested into a fund structure, and over a period of time, the desire for distributions and exits might be different than what the company needs. This is where somebody like us and our team can come in to provide that liquidity. And so when you think about the question regarding private wealth, the big theme in the market is really this convergence of public and private market, both on the capital raising side, i.e. historically, it's been institutional capital, public pension plans, sovereign wealth funds, endowments and foundations that have invested into privates. And now clearly a lot of retail capital, whether it's through 40 Act funds, semi-liquid vehicles, evergreen, are coming into that. So the type of investors coming into private assets is different. And then on the capital formation side, that's capital formation. On the capital financing side, historically, public equities or public market is where the end-all be-all is for companies. But today, as private companies are staying private for longer, they're just needing more capital from the private markets rather than the public markets. So when you have those two convergence themes, and when you start to see more retail capital coming into private markets, the desire for liquidity, the desire to see what's happening in the private markets, similar to what you see in the public equity markets, exits or secondary exits, the trading of stocks between you and me today as secondaries, we will start to see that trend becoming more and more prominent in the private markets as well.
Yeah, I'll just try to build on that answer. So in our view, the growth in private markets and specifically private equity incrementally is going to come from private wealth. It is today. The institutional investor is a mature investor for the most part. And to get to that $30 trillion number, it wouldn't come only from institutional investors. It has to come from private wealth marketplace, but also smaller institutional investors. And the reason why that is the convergence of several things that are coming together. First and foremost is these smaller investors who've dabbled in private markets, but have not enjoyed the experience because the typical LP structure is not made for smaller investors. It's very arduous. Through product innovation and regulation updates over the years, you're seeing products in the marketplace, both here in the States and offshore, that are allowing individual investors easier access to private asset strategies, in particular private equity. Secondly is technology. If you marry technology along some of these product innovations, it further makes it easier for for the advisor to make a decision, for the client to understand its exposures. So think of technologies in firms like 𝐒𝐞𝐫𝐢𝐞𝐬 and CASE, and some of the technologies they use to deliver that platform to the client base and the advisor. And I'd say thirdly is really the understanding of asset managers in a traditional sense, but also the larger private asset managers, private asset managers, seeing the opportunity, making very large investments into the segment. If you read the early announcements of Schroders, BlackRock, Apollo, KKR, Carlyle, all on down the line, their incremental investment as a firm is going into private wealth. And you see it all over their websites, you see it in what products they're launching, and you see it in the fundraising that they're reporting on. For the private equity team here at Schroders Capital, 6 years ago, our private wealth business was negligible, less than 5% for sure. Today, it's between 20 and 25% of our annual fundraise, and our annual fundraising's doubled in the last 5 years. So you can see the scale of that opportunity set is really coming to bear, not just in the United States, but offshore.